before you place your next trade, watch this. What if I told you that the US government just delayed its tariff deadline again until August 1st? Additionally, it just slapped a fresh 10% tariff on all BRICS nations, and we could be about to twist trade deals again. That's right, this is not your usual headlines. These moves are injecting volatility into today's markets. Welcome back. I'm Francois Duplessis, your market analyst here at ATFX Africa. In the next few minutes, we're breaking down how the latest tariff updates and global trade skirmishes could shift the pound, oil, and US equities. So stick around. I promise you'll walk away ready to trade with more clarity. The decision to push back the tariff deadline from July 9th to August 1st has given markets more runway, but also created uncertainty. With letters going out today to countries warning of new tariffs, the market is grappling with two overlapping narratives. First, the dollar initially weakened on news of delay, but firmed, and there's still a threat hanging over trade-sensitive assets. British pound dipped 0.2% as tariff fears rose and the US dollar has steadied. With US pressuring BRICS and UK trade deal exposed, we could see downward pressure on the pound. Looking at the GBP USD chart, the British pound dropped sharply last week after reaching fresh yearly highs at 1.375, currently trading around the 1.362 level. On a daily time frame, we can see that it is currently trading in an ascending channel, with the possibility of coming back down to retest the 50-day EMA at around 1.35. On the hourly time frame, we can see that during this morning's trading hours, it broke below the resistance level at 1.365, currently heading down to the near-term support at around 1.36 flat. Should this level hold up, we could potentially see a retest once more of that 1.365 resistance, creating a bit of range-bound trading. However, if this level breaks, the next support is sitting around 1.35.
Why is fast trade execution a must? Because you're more likely to get the entry price you want and the exit price you want. Reliable, rapid, responsive. Join ATFX today and let's get you started.
Switching gears to WTI crude oil. OPEC Plus surprised markets earlier this month by announcing an extra 548,000 barrels per day of supply in August. Combine that with a surprise US inventory build of 680,000 barrels, and you've got pressure on oil prices. WTI is hovering in the mid-60s. In fact, a move below $65 would reflect both rising supply and dampened demand energy. Will trade war jitters weigh on economic activity enough to push oil even lower? That's the key question here today, traders. With WTI, you can see on the daily chart how price bounced from $64 on the back of the OPEC Plus signal, but then fell again after the API build headline. Technically, $67 is now serving as resistance, while $64 offers initial support. If that $64 break happens, it could spark a drop towards $62, maybe $63 a barrel. Having a look at the 30-minute chart, WTI is currently heading for a retest of that 50 EMA sitting at around 65.5. There's a potential for a retest on the higher resistance level at 65.8. Should this level hold up, it'll most probably come back down for a retest of the support at $65 a barrel. As for US stocks, Dow Jones Futures dipped following tariff uncertainties, even though jobs growth came in stronger than expected last week at 147,000 new jobs in June versus the estimate of 111,000. That tight labor market pulls back on hopes of additional rate cuts for the Fed later this summer. The result? Equity markets are walking a fine line. Tech stocks may continue their rise, but cyclical sectors could feel the sting of higher trade costs and tariff ping pong. Expect sector rotation and choppy trading in US30 as headline risks spike. Currently trading around that 47,700 level, right in the middle between the resistance at 44,900 and the support at 44,500. It is currently sitting right above the 50 EMA on the 30-minute time frame. Should this level hold up, we could see a potential retest of the resistance. However, if this level breaks, we could go back down to retest the support, which if fails to hold up, could see a larger correction back down to 44,100. In our next market brief, I'll unpack how a final tariff showdown, even if delayed to August, could redefine setups and shake up markets. You won't want to miss it. However, that wraps up your daily market brief, brought to you by ATFX Africa, the broker that gives you an edge in today's markets. Simply head over to ATFX Africa and experience the difference for yourself. Traders, until next time, stay sharp, stay focused, and trade smart.